Hello students, how are you? I hope you're all fine. So students, today is our last day of practice to pass sessions being conducted by ACCA. So let's begin with today's work. So today we are first going to interpret the previous question which we were doing yesterday, and the question was Perkins, right? So I hope you remember what we were doing in Perkins. So I'll be starting with Perkins now. So I will be starting with the interpretation, and for interpretation I have made some ratios table over here, which you'll be seeing on the top of the screen. So there are two golden bars, Swanson's individual and Perkins individual. I hope you are being able to see it. And consolidated for 2007 is in purple, and consolidated for and Perkins results for 2006 are in blue. So students, let me discuss how to write the interpretation work. My screen is doing a bit problem. Please give me a while to check it. Okay, students. So here you can see Swanson's individual. Swanson's individual gross profit margin in 2007 was calculated by us yesterday, and it was 51.11%, right? Swanson's gross profit margin was 51.11%, and the operating profit margin of Swanson was 32.52%, right? So let's first discuss this. Just check the golden bar for Swanson in 2007. It shows that 51.1% gross profit margin was earned by Swanson, and Perkins individual results show that Perkins had earned 48.77%. Now comparing these two ratios, it shows that Swanson is earning a better gross profit margin than Perkins. So a question raises over here that why then Perkins sold Swanson? It shouldn't have sold Swanson if it was earning a better gross profit margin than Perkins. By holding a company which is earning a better gross profit margin, our average gross profit margin will increase. So why did they sell it? So was the decision correct or not? First of all. Secondly, what we need to analyze is that what about the performance of Perkins since 2006? What happens in 2007? Is the performance of Perkins improving or not? So for this, you will be looking at the blue block first. Just look in 2006, the blue block, the gross profit margin is 44.8%, right? And what about 2007? Look at the golden block, right? So in the blue block, you will see that the gross profit margin of Perkins was 44.8%. And now in the golden block, the 2007 result shows that the gross profit margin has increased to 48.77%. So since last year, the results of Perkins have improved. right? So what does it look like? That a better company, Swanson, which was earning a 51% gross profit margin, has been sold. But even then, Perkins results are improving since last year. The golden block shows a better gross profit margin than the blue block, right? That's what we are looking at. So now just please go through the introduction paragraph first. If you go through the introduction paragraph, which I'll be shading in yellow. So if you read through it, I have basically discussed the approach in the introduction paragraph. So when you are writing a report or writing an analysis, first write an introduction, that what you are going to discuss in the report, right? So I am basically, what I am discussing in the report, I am telling over here. So Perkins consolidate and individual financial information has been used to evaluate whether Perkins' decision to sell all of its holding in Swanson was appropriate. So first of all, why I am writing the report, I need to first tell the user that was the decision to sell Swanson was correct or not. Then what next? Further, it has been evaluated that further it has been evaluated so further it has been evaluated that whether performance of Perkins further it has been evaluated that whether performance of Perkins okay. So further it has been evaluated that whether performance of Perkins since last year was better or not. So this was the next question. So these two has been answered in this report, which you are going to read ahead. So I have first discussed that what I am going to discuss in this report, right? Then I say, how did I evaluate? So the next point which I have discussed is gross profit margin and operating profit margin has been used to evaluate the profitability. So I have used gross profit and net profit, operating profit margin to evaluate the profitability, and whereas the interest cover has been used to evaluate the company's gearings. So already in the question, three ratios were given: the gross profit margin, the operating profit margin, and the interest cover. So using these three, I am going to evaluate the report. No, in exam, student is asking whether if we use a colorful report, will the examiner be impressed? So student, no need to use any colors, right? Please do not use any colors, because using these colors and all will take your time, right? And if suppose I am not writing the correct answer and I'm not writing the concept properly, just using colors won't award me marks. So due to adding colors or eliminating colors, neither I will be gaining any extra mark, or nor I will be losing any mark. So please do not use colors type of things in the exam. It's not important. If you have given the required answer in a simple manner, right, you will never lose any mark. Examiner is bound to give you full marks if you have written it even in a very simple way. So these presentations are not that important, right? So please try not to use these colors etc. It's basically why I am using. The reason behind my usage of these colors is I have to explain it on the screen and you are not present in front of me. So I usually keep finding the ways in which I can easily attract your attention to important points. So due to that purpose, I am using colors, right? So please, there are no additional marks for colors, or we cannot impress examiner with using colors. We have to impress him with using the information which he needs regarding the subject if he needs information on financial reporting, you have to account for properly. If you account for properly, you will get proper marks, right? And if you write the correct reasons, you will get marks. Okay, so this was my introduction paragraph. Now I move on to explaining the three things which I have said in the report: the gross profit margin, the operating profit margin, and the interest cover. And then I'll be ending upon conclusion. Now see, what about gross profit margin? See, gross profit margin, when I write on gross profit margin, you have to basically first write your observations. So this is an exam tip. Now please listen carefully. What you have to do when writing a report and when interpreting things: first of all, you have made some observations from the ratios. So you have to write those observations. If you don't write your observations, you will get less marks, right? You will get it tonight on this webinar only. The Excel sheet will be provided to you, right? So don't worry, students. You will get the Excel sheets. Okay, so let me continue now. See, first of all, you will be writing the observations. So let me mention over here that one of the things you are going to write is your observations. Do write your observations properly. Like, how have I written the observation? See, this is my observation. This in red is my observation. Gross profit margin of Perkins after removing Swanson is seen to have increased from 48.1% to 48.77%. Right? So it has increased from 48.1 to 48.77%. What do this indicate? That gross profit margins of Perkins are improving due to selling Swanson. So it is 44.8. So if you look over here, please look here, these two items. So from 2007, after selling off and removing the records of Swanson, the gross profit margins have improved from 48.1 to 48.77%. This indicates an improvement, is it or not? This is my observation. Now, what will be the reason? The next point will be reasoning, that why did this improve? This is the next thing I have to explain. So next will be the reasoning. Now suppose someone is just writing observations that the ratio is rising from this 40 to 42, or it's declining from 38 to 37. He will not get all marks. You have to give reasoning as well, that what according to you would have resulted in the increase or decrease in the ratio. So now in the next paragraph, what you see, please look in the next paragraph, you get the reasons. The reasons behind the gross profit margin. Swanson's gross profit margin could be supply of goods at subsidized price by Perkins, which has been a factor over here in this case. Like as you saw in the question, Perkins was supplying goods to Swanson at 30% margin. Otherwise Perkins sells goods at how much profits? It is selling goods at a profit margin of approximately 48%. If you note over here, in 2006, what was the percentage? It was 44.8%, right? And if you note, in 2007, the gross profit margin is 48.7%. Means that usually the gross profit margins of Perkins are high, but they are selling to Swanson at 30% margin only. So due to selling at lower prices, the cost of purchasing of Swanson is lower. That's why Swanson is being able to earn a higher gross profit margin. Now what happens that once if you see that the gross profit margin are increasing from 2006 to 2007, from the blue block to the golden block, why has this increased from 44.8% to 48.7%? This has increased due to the fact that in September, Perkins has sold Swanson, and now Perkins has started selling to third parties along with other businesses. So now the Perkins is not selling at 30% margin to Swanson. So the goods being sent to the third parties in the market are now being sent at either 50% or more. So now the gross profit margins are, compared to the previous year, are improving because of not selling to Swanson at subsidized prices. Are you agreed to this reason? So if you read in the second paragraph of the gross profit margin, what it says, the reason behind Swanson's better gross profit margins could be supply of goods at prices at subsidized prices by the Perkins, which can be seen from Perkins gross profit margin, which are 44.8% and 48.77% in 2006 and 2007. But it sells to Swanson at a 30% margin. So this is the reason behind why the Swanson's gross profit margin is 51.11% and why Perkins gross profit margin is 48.1%. So over here, you are getting stronger marks by giving the reasons. So this is all reasoning. Now what happens in the further discussion? So the further discussion is, if you read this further, if you read this third line in the second paragraph, further it can be seen that Perkins gross profit margin has improved from 44.8% in 2006 to 48.77% in 2007, which is improved probably due to stopping to sell Swanson at subsidized prices after selling it entire holding in it. So this is the reason behind why Perkins' own gross profit margins are rising and why Swanson's gross profit margin were better than Perkins. Now from the next year, now what you say, has Perkins taken the right decision or not? So according to me, Perkins' decision is right, because if they sell Swanson, they will be selling to external parties at more than 30% margin. So from upcoming years, their gross profit margins will improve. Now, what about operating profit margins? Let's look at the operating profit margins now. See, the operating profit margin last year was 16.8%, right? And now the current year, Perkins individual, this has improved, right? But what about this triangle? Swanson's operating profit margin is 35.52%. I do agree and accept that Perkins' operating profit margin has improved since previous year, but Swanson's operating profit margin is very high. So what could be the reason behind this? Secondly, if you see that if you have sold Swanson, which was earning a better gross profit margin, what should have happened? Your operating profit margin should have declined, but your operating profit, Perkins operating profit margin is rising from 16.8 to 19.8. This is 3-digit increase. So how can it happen that you sell a better company having a better operating profit margin and your operating profit margin improve? Your operating profit margin should have fallen due to selling Swanson, which was earning 35.52% operating profit margin. So the reason behind was that The reason behind this was that like Swanson was, what was Swanson doing? It was obtaining goods from Perkins at lower prices, right? Which was affecting the gross profit margin. Likewise, what happened? The subsidiary company usually use space of parent company's buildings. Subsidiary company use maintenance facilities of the parent company. They either do not pay at all to the parent company for these services. So what happens that due to this, using the services of the parent company without any price, or even if they pay a price, they pay lesser price than they would have to buy those things from the open market. So due to this, the operating expenses of the subsidiary companies remain low. And if their operating expenses remain low due to the subsidization being obtained from the parent company, due to this, their operating profit margins remain high. So this is what the reason behind this higher operating profit margins of Swanson. Secondly, one more thing that you will note, that in 2007, Perkins' operating profit margin has improved. Why? Why has it improved? We need to know that also. The reason behind that can be that now, as Perkins has sold Swanson on 1st September, for the next 4 months, what the question says, have you noted in the question what the question says? Let's check in the question. According to the question, if you read this paragraph, they say that once they sell Swanson, they now have some surplus space. So after having the surplus space, they have rented that space to a new tenant. So due to renting it to a new tenant, what happens? They have started earning some income. Now, due to earning this income, the operating profit margin of Perkins should increase. So one of the reasons is that their operating profit margin has increased is they have sublet its property to someone else, and Swanson was not paying any rent for this property. So now, did you get why operating profit margin of Swanson was higher? Because it was not paying rent using Perkins facilities, and obviously their operating expenses were low. So they were having a higher profit margin. But now, what will happen in the next year? In the next year, they will be earning a full year rent income. So Perkins is going to have even an operating profit margin better than 2007 and 2008, because in 2007 only 4 months rent income was being received, and in 2008 they will be receiving the whole 12 months rent income. So it's going to be a better operating profit in the next year, and a better, even better operating profit margin in the next year. So in the next year, obviously, because of selling of Swanson, the Perkins is not going to uh, make anyone utilize its space and maintenance free of cost. It will charge someone else for these things, and obviously it will improve its operating profit. So this is again in the favor of Perkins, showing that what's the benefit of selling the company Swanson, the subsidiary company. So things apparently looked like that Swanson was a better company and they shouldn't have sold it, but if we look at these factors of subsidization, the Perkins company have taken the correct decision, and they can improve their profits by selling of the Swanson company. So let's look what I have written over here. Again, first I have written observations, and then I go on to give the reasoning work. So first I give observation, and then I explain that why the things have changed, and why there is an increase or decrease in the gross profit margins or net profit margins, why there is a difference. So what do we mean by analysis? By analysis, we mean giving the reasons for the difference. So what do analysis mean? Giving the reasons for the differences that you note. So first you will write the observation and then you will explain it. Okay, so let's move ahead now. So let's read the operating profit margin thing. The operating profit margin, I'm reading this paragraph first. I'm making it yellow. The operating profit margin is seen to have increased from 16.8% in 2006 to 41% in 2007 due to gain on disposal being recognized in the operating expenses. After removing the effect of gain on disposal of Swanson, still an improved operating profit of Perkins can be seen. So even after removing the gain on disposal from Perkins operating profit and operating expenses, they are having a 19.8% operating profit margin compared to the 16.8% last year. So what's the reason behind it? So now you'll be seeing the reason in this paragraph, which will be highlighted in blue. So in the blue paragraph, just go through it. Swanson's operating profit is 32.52%, which is much higher than Perkins, 19.8% in 2007 and 16.8% in 2006, which could have been due to Swanson obtaining facilities like space, maintenance, etc. from Perkins at either no or subsidized cost, resulting in reduced operating expenses and therefore better operating profit margin. So in blue, you are getting the reasons. Right now, what's next? In the next paragraph, I'm explaining the Perkins performance since last year. The reason behind improving operating profits of margins of Perkins in 2007 may be due to charging rent from the new tenant. Swanson's used to use this space without any rent until it was under Perkins control. This could improve the operating profit margins of Perkins more in the next year, as it will be earning rent over full year in 2008. So due to this rent income, even more operating profit margins will be seen in the next year. Okay, so now I've completed with the gross profit margin, observations and reasoning, and now I'm coming on to the interest cover. So what about the interest cover thing? So what is the interest cover used for? Interest cover should always improve. Interest cover should be high. If the interest cover is high, what do interest cover show? That we can easily pay our interest. So if we can easily pay interest on loan, which is a fixed cost, the company is seen to be attractive by the creditors, and we can easily attract some credit finance from the loan providers. So interest cover should be high, very high, so that the creditors can easily take a decision to provide more funds to you people. So what happens that, what about the interest cover? Let's first take an observation from the ratios. See, the blue block. If you look in the blue block, what you see that the Perkins individual interest cover was just 3.5. 3.5 is very low, but now what happens? 47.33. And what about the consolidated? Consolidated was 19.77. So if you compare the blue block with 19 points with the purple one, you will see that interest cover has improved in 2007 until Swanson was there. Like once Swanson has been sold, once Swanson has been sold, okay, since Swanson has been sold, by selling Swanson, Perkins received some money, right? And those money would have been used to pay off the liabilities. So due to paying off the liabilities, the interest expense have reduced. Secondly, how will interest cover improve? Interest cover improve either due to the increase in operating profits or due to the decrease in interest expense. So interest expense have decreased due to paying off the loans. As they get money by selling of the shares, they may have paid the debt, their loans. So the interest expense would have reduced after selling the Swanson, right? Second thing is that their profits also have improved. One of the reasons for improving profit is that now they are earning rent income, which they weren't earning before, right? And second is that the gross profit margin of Perkins has also increased, because now they are no more selling goods to Swanson at subsidized prices. So they must have been selling goods to external parties at full profit margin of around 48 to 50%, right? So this is due to, these are the two reasons behind why the interest cover of Perkins is improving. So let me show you what I'm writing. So my comment on the interest cover is like this. First of all, I've mentioned just look in the maroon block. Interest cover has shown good improvement in 2007 compared to 2006, as there has been a significant increase in profits. So due to profit, it has improved. Further, after removal of Swanson, the interest cover may have improved due to repayment of loans by Perkins with the disposal proceeds of shares in Swanson. So I've given the observation over here as well, and along with it, I will give the reasons. So two reasons I have given. One, their interest expense have reduced due to decrease in loans, repayment of loans, and secondly, their profits have increased due to the increase in gross profit margins and their increase in the rent income. Now, what's the conclusion? So in the end, I get the conclusion. So my conclusion is in red. So what does it say? Swanson's profit margins were reported to be better than Perkins, but this was due to the subsidized goods and services being provided by Perkins. Now Perkins, until it was a subsidiary. Now what happens that this was just an observation. Now, was it right to sell Swanson or not? Now it looks like that more goods will be sold by Perkins at market prices, and due to rent income from letting space, its profit margins would improve due to improved level of profits. Further, the interest cover has also increased, making Perkins more attractive. So in the end, I conclude that the decision of Perkins was better and it was in favor of the group as a whole, right? So let's move on to the now financial statement topic. Now I'm going to cover the financial statements. So we will be doing two questions on financial statements, two different types of questions. So let's start with it. So you'll be seeing in a short while a financial statement question. Now this is in the day 4 and 5 handout. This is present in the day 4 and 5 handout. Okay, one of the student is asking about the adjustment to the consolidated financial statements related to the last question, Perkins. So let me tell that it was not a there was nothing wrong there, but in order to make the financial statements of Perkins comparable with the previous year, we had to remove the sales and the expenses of subsidiary company, so that we can compare like versus like. So in order to do that, I removed the sales and expenses of Swanson from the consolidated results of the Perkins company. That was basically the thing. And when doing so, I removed sales and operating expenses of Swanson. But what did they say in the question, that none of the intercompany sales remained uh, unsold by Swanson. So all of the goods have been sold to external parties by Swanson. So all of the profits was realized. So there was no unrealized profit. So I didn't have to make any unrealized profit adjustment over there. So I just removed sales from the parent sales, and the cost of sales adjustment is probably done in the subsidiary company's records, because the purchases are recorded with Swanson. So that's why I have not adjusted cost of sales. I was only adjusted the sales element, right? So have I answered your question properly? I hope you are satisfied. Who are asked the question? Okay. So about disposal of Swanson, what I did, one more question I will answer first, and then I'll go to the financial statements. So, see, uh, the error by the parent company was that they had included the standalone gain on disposal. They have deducted the standalone gain on disposal of Swanson from the operating expense. This was the error. So what I did, the gain was a credit balance and the expenses are a debit balance. So when both of the things get offset, right? So the operating expenses would have reduced. So I added back the gain in the operating expense. So that was the correction entry. Okay. Okay, students, let's move ahead. Uh, some people have asked me to uh, some people have asked me to do some particular topics as well today. So students, I will talk about those topics afterwards, right? So don't worry. I will if even if I am not able to do all topics today due to we have some limited time. We have to just complete all of the syllabus in 15 hours time. So I will do it by some other way, right? So don't worry. I will be doing the topics that we won't be able to complete in practice to pass session. I will do it in some other way. Okay, students. So please read this question. Vernon company first before I start solving it. So I'll be giving you a 2 to 3 minutes time to read this question. So please go through this question, adjustment this question, then I'll be solving this question. I will be scrolling the question down. Okay, students, have you read the adjustments from the question? So what I have done in order to save some time, I have already prepared the solutions, which I'll be explaining to you. So on the right hand side, left hand is the question, and on the right hand side, you will find a solution to this question. One company, and I'll be explaining this solution. Please follow me that what I tell about the solutions. See, this I'll be marking the things which I will be explaining to you people, right? So look, 75,350 was the revenue which was present in the trial balance, right? So I have added 3407 to this trial balance figure, and I have also added 1875 figure to the revenue. Now, these have been brought from working one and working two. Now let's see what working one and working two says. So I will moving on to working one to explain this. See, the first point in the question was that the 8 million amount will be received in 1 year's time from the sale of goods. So if the amount is to be received in 1 year's time, there is a significant financing component in it, as discussed in IFRS 15. So what we shall do, we shall first take the present value of it. So I have multiplied 8,000 with 1.08, the present value fraction, to the power minus 1. So I get the present value, which is 7407. Now in the adjustment, what did they say? That they have already recorded how much? 4,000, yeah, 4 million into sales and receivables. So as they've already recorded this much, now what amount is remaining? 3407 is remaining. So I have included this 3407 above in the working. So you could see in the working this 3407 is there over here, right? So this was my first part, working one. Now let's talk about 1875. Now what happened? They have made a sales in foreign currency. So the foreign currency sales has not yet been received. They have not yet received the money from it. So they have completely omitted that transactions. They have not recorded the sales to the foreign buyer and in the foreign currency. So we will have to record that sales first. So what was the rule in IS 21 regarding the foreign currency sales? So IS 21 says that the foreign currency sales should be recognized at the spot rate. So first I have recorded the sales at the spot rate, which you can see over here. The sale was of 12 million foreign currency and the spot rate was 6.4. So what I did, I divided 12 million with 6.4 in order to arrive at 1875. This is on 1st December 2008. But what happened then, that after 1 year time, you can see the receivable in green. After 1 month's time, on 31st December, there came the year end. So on the year end, the spot rate changed, right? Now sales will not be retranslated, but the receivable will have to be retranslated. Why? Why receivable will have to be retranslated? Because receivable is a monetary item, and monetary item will have to be retranslated at every year end. So what I did, that I converted the receivable of 12,000 divided by 6 into 2,000. So the company was enjoying a benefit. So instead of 1875, they will be receiving 2000. So they earned a gain of 125. So I have recorded this gain in the finance income in the income section. So you will note over there the gain which will be reported. So first of all, I have adjusted the sales, right? So the sales amount is now 80,632. So this has been done, right? There was no adjustment to the cost of sales. No adjustment required to cost of sales, so I have not made any adjustment. And then you arrive at the gross profit. So this is also done. Gross profit, sales minus cost of sales. Next is operating expenses. So in the trial balance, I had operating expenses of 20,640. What is this 125? This 125 is the gain on retranslation. This is the gain on retranslation as I showed you below. Retranslation of receivable. $125. Right now, there is one more adjustment of 400 over here, 400,000. This is remaining. I will discuss after the prayer and the refreshment break. So students, let's meet after the refreshment break. So we'll have a 15-minute break. So after the 15-minute break, we'll continue with this preparation of financial statements. So let me tell you about some the remaining topics as well. We are doing this financial statement of different types. We'll be doing statement of changes in equity, and we'll be doing some questions on associates as well. And regarding the consolidation thing, some people want me to do some consolidation questions, some long questions. So what I will do, I will provide you some videos on it on the WhatsApp group, right? So you can facilitate yourself through those videos, right? So obviously we had a limited time in which I have to cover various topics. So I have covered those topics more that are usually overlooked by people or which requires more attention. Consolidation usually people do in a lot detail. So I have not I have covered the disposal area more, because disposal area people don't do that much. So I felt that I should do that area more. So I have spent some time on the disposal area. So okay, students, let's meet in 15 minutes time after the break. So see you after the break. Okay, students, welcome back. Let's start. Let's continue with the question. Okay, so let's move on to operating expenses. Okay, students, let's move on to operating expenses. This figure 20,640. This has been obtained from the trial balance, and 125 was the gain. So I have deducted the gain from the operating expenses, and your operating expense will reduce. Ultimately, your operating profit will increase. So due to the decrease in expenses, your profit will increase. You can also show the gain separately. So it doesn't matter if you show the gain separately, right? So now the next one is, we'll talk about this 400. In the operating expenses. So what happened that 400 has been deducted from operating expenses. Why? See, if you make an investment, like if you read this question, in this question they have discussed that they have made an investment in a 9 million bond. Let me show you in the question that Vernon had acquired a $9 million bond. It's a 5% bond, and they have acquired it, means a financial asset. They have made an investment, IFRS 9 adjustment, right? So when they purchase a 9 million bond, they have incurred a brokerage cost on it. They have paid a broker fee. So this 4 million should be added to the 9 million investment. So the investment will not be recognized at 9 million, it will be recognized at 9.4 million. But erroneously, what they did, they have recorded this 0.4 million as an expense. So what they say, which has been expense to the operating expenses. So this 0.4 million should have been debited to the investment rather than debit to the operating expense. So what I have done is I have credited the expense and debited the investment. So if you look over here in the answer, so in the answer you will see that I have deducted this 400 from the operating expense, and then means I have credited the operating expense and I have debited the bond. So see, if you look in the bonds working number 3, look at working 3. You will note over there that I have included 400 over here. So these the accountant has not recorded the bond at 9400. He has recorded at 9000. But now I have made the correction and now I had brought the bond to 9400. So the accounting will take place on 9400. So this was the correction. Okay, let's move ahead now. So what's the next? So operating expenses corrected. So let's move on to the next, finance cost. So there were no adjustment to finance cost. So I have picked the finance cost as it is at 4050, right? But there were adjustment in investment income. So the first adjustment in investment income is of 296. This is shown in working one. If you see over here, you can see a figure 296. Now, how did it arrive? See, there was a financing component in the sales. In the sales, there was a financing component. 7407 was the sale amount, the principal, and we had to record interest income over it now because we have lent money to the customer. So instead of sales of 8,000, we had recorded 7407. So now 6 months have gone. The sale took place on 1st July. Now it is 31st December. So 6 months have gone. So I should record an 8% interest income of over 6 months. So I have calculated the 6% interest income, which they have not recorded, right? So now it has been included as 296 over here. Now the next is 302. Now what is this 302? Let me tell about this 302. So I'll be moving on to working number 3 for this figure. Okay, working number 3. Now what happened that I recorded the bond at 9,400, including the brokerage cost. If you remember what I told you about transaction cost, that into what categories of investment in IFRS 9 we can add transaction cost. If you buy a financial asset at fair value through profit and loss, in that case you will record the transaction cost in the profit and loss account. Otherwise, if you buy a financial asset at fair value through OCI, or you buy a financial asset at amortized cost, you will add the transaction cost to the investment. So the same thing happens here. I have included the transaction cost over here, and now I have brought it to 9,400. So the interest income will be recorded on this investment amount 9,400 multiplied by the effective rate, which is 8%. So effective rate on the bond was 8%. You can see that over here in the question, 8%, and the coupon rate was, or the stated rate was 5%. Now I told you in IFRS 9 that the interest or the payments during the year occur at stated rate, and the stated rate is applied at the face value. So the face value of the bond was 9,000. So what did the accountant do? That the accountant multiplied 9,000 with 5% and recorded the interest income of 450 in the financial statements. Look, they have mentioned it in the question. Let me show you what they say in the question. See, they say Vernon company has recorded the interest received. They say interest received. So what interest was received? The interest received was 900 multiplied 9,000 multiplied by 5%, which makes 450. So they have recorded the interest income at 450. This is not correct. The interest income is always recorded at the effective rate. So we will make the correction now and record the interest income at effective rate in accordance with the IFRS 9. So let me make the correction now. So what will be the correction? 450 has already been recognized in the investment income. So what should be the correct income? First, we need to know that. So the correct income is 9,400 multiplied by 8%, which makes 752. So how much short income they have recorded? 752 minus 450, which makes 302. So this 302 I have recorded above in the investment income, which was further required to be recorded. So over here you see 302 in here, right? Now what about this 4,000? What is this 4,000? So this is the 4,000 belongs to investment properties in the question. Let me show you the question. Look, transaction number 5. If you look at the transaction number 5, Vernon Company values investment properties using fair value model. This has been covered in IS 40. Right? This has been covered in IS 40. Now, what does IS 40 say regarding investment property? That if you are carrying the property at fair value, the gain or loss on switching from book value to fair value will be recognized in the profit and loss account, right? So they earned a gain due to the increase in value by 4 million. So this gain should go in the profit and loss account as income. So I have recorded that 4 million in the profit and loss account. So as this is given an adjustment, we should understand that why they have given an adjustment, because they have not recorded the gain. So I have recorded the gain over here, and that's 4,000 in the investment income. So in investment income, they already had an amount first, which was 1520, right? Then this was the excess interest income required as to the bond. Then, sorry, 296 was the interest income on that sales amount, the financing component. 302 was the further interest income on the bond, and this 4,000 is the income on the investment property. Okay, so this gives you 6118, and the profit before tax makes to 16,175. Now we'll work on tax. Now, what do they say about tax? Before moving on to that, I will answer some questions which have been received. Then I'll move on to the tax topic. Okay, so there is a question from a student. Why would you add 1875 and not 125? See, what the question says, that they have completely omitted the transaction. Let me show you that they have not recorded the transaction at all. I'll show you. Please read note number 2. In the note number 2, they say that Vernon Company also sold goods to an overseas customer on 1st December, right? The year end is 31st December, and it was of 12 million cromets. The currency is cromets, and our currency is, the functional currency is dollars, right? So what they did, that the agreed 60-day payment period was there. So what the question says, this is important, please read the question correctly. No entries have been made to record this sale. So they have completely ignored the sale. That's why I had to record the sale. So for first, what I did, I recorded the sale, 12,000 divided by 6.4. This was at a spot rate. So in blue, you have the sale. Now, once you record the sale, what will be the entry? Receivable debit and sales credit, right? So sales have been recorded now. Now, what happens, that 1 month goes away and comes 31st December. So is the receivable a monetary item or not? According to IS 21, it is a monetary item. So monetary item will have to be retranslated on the reporting date. So on the reporting date, I retranslated 12,000 divided by 6. So first I included in sales 1875, and then I found that the rate gets changed from 6.4 to 6. So I have adjusted for the rate, and now the receivable balance gets 2,000. So the receivable increases from 1875 to 2,000. Agreed? So this increase, receivable gets debit. So what gets credit? The profit and loss account get credit. So I have recorded that 125 as income. Okay. So that's answer to that question. Okay. Sheets will be made available to you today. your last day sheets will be made available in the WhatsApp group, and the rest will be available made available third and fourth day on here on the webinar, where all handouts are being given. You will get over there, right? So please don't worry. Okay, so let's move ahead now on to the next tax adjustment. So moving on to the tax adjustment, let's look at the question. In the question, in the trial balance, you are having a tax amount, which is a debit balance. Can you see this one? 130, it's a debit balance. What do we mean by a debit balance in the trial balance? They have discussed this point below. So they say that look in the text note. They say the text figure in the trial balance represents under or over provision. Now, if there is a credit balance, as we saw in the previous questions of IS 12, it was an over provision. But if there's a debit balance, it is an under provision. So you have to record further tax expense. So that 130 is related to the previous year, and they have recorded lesser tax expense in the previous year. So you have to further add 130 to the tax expense this year and reduce the profits as they have not recorded previously. And this is basically a change in accounting estimate, right? As they have recorded less, so their estimate was lesser last year, and now they feel that they now they have paid more, so they are having a debit balance over there. So the 130 should increase. Further, the current tax liability is 3.2 million. So this is the income tax for the current year. So this should also be added to the expense for the current year. So 3.2 belongs to the current year and 130 to the previous year. So I have added both of them over in the profit and loss working. So let's see what I have done. So I have added these two items. So 3,330. Now this gives you the net profit, right? Now the income statement is not ended over here. Remember, income statement is named as other income statement is statement of comprehensive income. This is your net profit, this one, 12,845. After this, you will record any revaluation gains, your IS 16 revaluation gains. So once the profit and loss account is over, then starts your other comprehensive income section. So look, let me show you first our income statement. Can you see two red headings in the income statement? You will be seeing two red headings in the income statement: the profit and loss and the other comprehensive income. So there are two sections in the statement of comprehensive income, right? If you remember, in that text question, I told you that other comprehensive income will include revaluation gain, and the tax on that revaluation gain will also go to other comprehensive income. So this is about the same item. So what happened that the gain was of 12 million. I will show you in the question, and 25% was the tax rate. Now what will happen that once you record the gain in accounting records, the tax people will not accept this gain. They will not record this gain. So you have increased your assets carrying value in accounting, but not in tax records. So what happens if the carrying value exceeds the tax base? You are going to have a taxable difference, and you have to pay tax on it. So a deferred tax liability will arise. So deferred tax liability will be credited and expense will be debited by how much? 25% of 12,000. So as the income is reported in the other comprehensive income, its tax should also be reported in the other comprehensive income. So I have applied 25% on this 12,000 to arrive at 3,000 tax expense. So this tax expense, this one, the 3,330, this belongs to income in the profit and loss account. But this 3,000 belongs to the income in the other comprehensive income. That's why it has been reported over here. So let me show you the income of 12,000 in the question. First, do you remember IS 16? In IS 16, the IS 16 says that if the value of the property increase and you are using the revaluation model, the revaluation gain will be recognized in the other comprehensive income. You cannot record the revaluation gain in IS 16 in profit and loss. We have to record it in the other comprehensive income. So see, please look at adjustment number 4. This has been covered in adjustment number 4. So in adjustment number 4, they say that during the year, Vernon Company revalued its head office for the first time, resulting in an increase in value of 12 million at 31st December 2008. And the deferred tax applicable to this gain is 25%. So I have deducted that 3,000 from that gain from the other comprehensive income. Okay. So this was also covered in the IS 12 MCQ question, if you remember. So let's move ahead now. Yes, we are taxing the revaluation. You're right. So we have prepared the profit and loss account in this question. Now let's move on to the requirement of this question. Let's see what the question asks for. The question asks for statement of profit and loss and the other comprehensive income. So we have made it. We have got the 15 marks, and then calculate the earnings per share for Vernon Company. So do you have any potential ordinary share? Did you have any potential ordinary share in this question? You didn't have. So no need for a diluted EPS, but we have a right issue in the question. So in order to adjust for the right issue, you have to make a working basic EPS working in here. So if you note, please read note number 7. There is a right issue over here. Right issue is 1 for every 5 share. 1 for every 5 additional share. Sorry, 2 for every 5 additional shares. Sorry, 2 for every 5 additional existing share is the right issue. So the company is going to issue 2 shares to the existing shareholders who have 5 ordinary shares. At what amount? At 2.4. Okay, let's look at the EPS working, basic EPS working. Acha, there are 2 right issues in this year. Let me highlight those 2 ordinary share issue during the year. One issue is at the full price and the other one is at a discounted price, making it a right issue. Look, on January 1, 2008, Vernon Company had 30 million $1 equity shares in issue. This is opening balance. And then after 3 months time, on 1st April 2008, Werner Company issued an additional 5 million shares at full market value. So this is the first issue, at full market price. This is important, issued at full market price. No adjustment fraction required. And then on 1st July, after further 3 months, the company made a 2 for 5 right issue for rupees 2.4. So there are 2 issues during the year. So let's see the right issue adjustment and the full market price issue adjustment in the EPS working. Okay, students, that's our EPS working. I have put the EPS working in this blue block. See what I did first of all. First I took the ordinary shares from 1st January to 31st March, these were 30 million, right? Then what happened? 1st April, the company issued further 5 million shares. So now the total shares are 35 million. Then the company issued 2 for 5 right shares. Just multiply 35,000 with 2 and divide by 5. You get 14,000. This is the right issue. And this is the full price issue. Now after this, the shares get 49 million, right? Now we multiply it by the time proportion, 3 months, 3 months, and then from July till December, 6 months. So this makes total 12 months. This should make up to 12 months. Now, what will be the adjustment fraction applied to? Adjustment fraction will be applied to all the outstanding shares before the right issue. So adjustment fraction is applied to what? All the outstanding shares before the right issue. So look where the right issue occurs. This is where the right issue occurs. So just mark. This line shows you the shares before the right issue. So I have included the adjustment fraction over here with this and also with this. So I've applied the adjustment fraction to all shares before the right issue. Now what is the adjustment fraction? How have I calculated this adjustment fraction? The adjustment fraction is come right price, which is 3.1, and the theoretical ex right price, which is 2.9. Now how did I arrive at 2.9? So this is the working for 2.9 now. 5 shares were there and their price was 3.1. So 5 multiplied by 3.1 before the right issue. This makes 15.5. Then the company issued further 2 shares. These shares were issued at 2.4, the right share price, discount price. So this gives company further cash of 4.8 million. So now the company has capital of 20.3 million, and the number of shares are 7 million. So if you divide the 20.3, this amount, the value of shares, with the shares after the right issue, 7 shares, which are held by an investor, the theoretical ex right price, ex right means after the right issue, gets 2.9. So I've included this over here, 2.9. And this fraction is the adjustment fraction, which you can see over here, applied to all shares before the right issue. So this gives you the weighted average shares now, 41,871, and 41,871 has been taken over here. And the profits as per net profit as per the profit and loss account, this is the net profit as per profit and loss account. Net profit will not include revaluation gain, remember. So the EPS is 31 cents, right? So that's the working for EPS. So it was a revision for you people. Okay, now next let's move on to the next question. Now students, next question is coming in front of you. You please read the question and just think a bit about how will the adjustments will be carried to the financial statements. Now this is a bit different question than this one. In the current question, you had to prepare a profit and loss account. In this question, this Haverford company, the company has already prepared a profit and loss account. It has already done it. And look, you can see a profit in the trial balance. So this is one of the type of question they are asking. You can see the profit for the year ended December 31st, 2007 already in the profit and loss account, 2250. But this profit is not correct. this is unadjusted profit, incorrect or unadjusted profit. You have to first adjust this profit. So in this case, you don't have to deduct a cost of sales and operating expense and tax expense from the sales to arrive at the profit, because you already have profit. You have to just make the amendment to the profit to reach the correct figure, right? So this is another type of question. In this case, you have to make a statement of adjustments. So what do the question require in this? You have to first read the question, then I will continue. So let's first read the question, then I'll continue. See what I have made in this question. I have made a statement of adjustment, not statement of comprehensive income, and started with this 2250 and made all this adjustment to arrive at the revised profit. So this is one of the kind of questions which you get in the exam. So please be prepared for preparing an income statement and also adjusting the draft profit into the revised or the correct profits. So please do both kind of questions. No, there is no kind of there is a question received from a student in this chat box, that is there any kind of format for adjusted profit? There is no format. There is no format. It's completely up to you. You just pick the draft profit from the question and start doing adjustments. Start adding and subtracting things from it. So there is no specific format of statement of adjustment, as this will not be communicated to the shareholders. This is just for internal workings, right? But there is a specific format for income statement and balance sheet and statement of equity and cash flows. Why? Because we have to report it to the shareholders. So over there we need to so we have to follow a formality over there, because we have to issue to the public. This statement will not be issued to the public, so it's up to you. There is no format. But this is the simple one which I have used. Just keep adding or deducting items. Okay, so first please go to the question, then I'll start doing the question. So I'll be discussing some exam tips as well today after I complete this question, and I'll be doing some one or two MCQs on associates as well. But let's first do this one. Okay, students, please read the adjustments in this question. I will keep scrolling the sheet down after some time. Students, have you gone through the question? I'm giving you one more minute to please read it, and then I will start. Students, it is very necessary that you read the question very carefully. If you don't read the question very carefully and you do not understand what the examiner is trying to say in the adjustment, obviously you won't be giving the correct answer. So the first necessary thing in the exam is that please concentrate on the question. This is the most important exam tip. But now, once you understand what the examiner is saying, the effort you will be making will be in the right direction. So please don't hurry in the exam, right? So it is not important that you do all questions, right? So if there is a student and he wants to pass the exam in the first instance, it is not necessary that you do all questions. Even by doing lesser questions, you can pass, right? But the important thing is that you get things correct. So you can't get things correct once you read the question correct. Once you read the question wrong, you can't get it right, right? So you have to first read the question properly, give some time, properly understand the question, make the right effort, and you start getting marks. So even you, in the end, if you leave with some questions unsolved in the exam, you will pass. But if suppose you hurry up and make a mess, and you do all questions that are present in the exam, but you fail to do it right. So by doing all questions and getting them wrong, how can you pass, right? So it's more important that to invest some time in understanding the question and try to do things correctly, so that even if you do lesser questions, you will pass, right? So that's more important. Okay, obviously by reading only the questions right, okay, or correctly or accurately, you won't pass if you don't have the knowledge of IFRS 9, IFRS 16, and consolidation and all. Obviously, the information you need regarding the accuracy of the standards and rules, and then only you can apply it over there, right? Achha. One more thing important I want to tell you is that before I go on to the detailed exam tips, a tip I want to give right now before starting this question, that can you see I have made some workings over here. You are not necessary, you do not need to add colors or something to over here, but you see I have made workings over here. I make workings over here. In the previous question also, in that Vernon question, I had made workings. I was showing the things being added, subtracted over there, right? So please try to uh, work on the constructed response space and the CB plot platform provided by ACCA to you on the ACCA global website, right? It's very important that you work on it before you attempt the exam. It is very important that you are familiar with it. So please do these questions and present these questions on that platform, on the constructed response space, so that you get very friendly. At least if you do 2 to 3 questions, you will get friendly in it, and you will know how to do it, two things, right? So in exam, you shouldn't be having a stress on how you will be using the constructed response space. You should be just worried about the concepts over there, how to apply it. So please try doing these questions on the constructed response space and the platform before you appear in the exam. Just invest around 4 to 5 hours and apply all these questions which you have already done from the practice kits and past exam questions over there, so that you come to know, right? And if you want, suppose if you are planning to practice 2 or 3 more questions on financial statements or consolidation or interpretation work, so instead of doing it on the paper, you can use the constructed response space instead of doing on paper or your registers. So that will help you out a lot in learning things, right? No, you don't need to make, there is a question from a student that do we need to make entries in the constructed response question? So I would say, see, entries are basically workings. Entries will be taken as a working by the examiner, right? Now, one thing I want to tell you over here, like, see, let me give you an example. Suppose that you want to calculate a sales figure, right? Let me tell you. See, suppose in this question Varnan, are you looking at the sales figure? The sales figure is 80,632. Now what will happen that examiner will how will he check this figure? What he will do, he's bound to check each and every cell of your constructed response space. Remember, each and every space he's bound to check. What he will do, he will go to the cell. Now look, when he will read the cell, that's the cell which bears 80,632. What will happen? He will be looking, or he will be able to see this. Can you see this working in the formula cell in the pink circle? He will be looking at this figures 75350, 3407, and 1875. Now, as he's able to see all these figures over here, you don't need to put them over here. No need. I have just put it over here because of the need to explain to you people in this webinar. Just that's why I'm putting it here. Otherwise, this is enough, right? Which you are seeing in that pink circle. Likewise, the operating expense figure, the examiner will go here. When he goes here and he reaches this cell, he will be able to see this in the pink circle. So he will be looking at this 20,640 and minus 125 and minus 400. So why do you need to show the working separately? But those workings which are not present in this cell, you need to show it separately. Agreed? So these working like this, these are not present there. Now, how did I get 3407 in here? This I have not shown over here in this cell, so that's why I'm making this working separately. Now suppose that what happens that when you make workings and show the examiner that you are deducting this figure, this 4,000 from this 7407, and you make a mistake in deducting it, and you instead of 4,000 you write 400 over here, and you miss this 0 over here. What happens that this figure gets wrong? But even then you get a mark. You get a mark over here, 1 mark. Why? Because the examiner knows that you have made a clerical error, and examiner knows that you were intending to deduct 4,000 from here, but due to the exam stress or some other reasons, clerical reasons, you were able to deduct only 400 from here. So always remember, make workings. If you make working, an examiner knows that you are adding, subtracting right figures, but erroneously you make some mistake, right? So he will be awarding you marks. And once your figure over here is 400 instead of 4,000, this amount gets wrong. If this gets wrong, then this figure will also get wrong. This will also get wrong. This will also get wrong, right? And this will also get wrong. Ultimately, your EPS will also go wrong. Are you getting my point? So if you are making the working over here and this figure gets wrong, so examiner knows that due to this, all of these figures are getting wrong. So still then you will be getting marks. You will be getting your EPS marks on the basis of the wrong figure over here. So your EPS figure will be marked correct because the examiner knows that where you made the mistake. But suppose all workings are missing, you are doing thing directly. So examiner doesn't know where you make a mistake. So over there, you won't be able to get marks on the carried forward basis, right? So please take care and make workings regarding what things you are adding or subtracting, and no need to add or subtract things if they are being visible in the cell, because examiner will be reaching the cell and he's bound to check each and every cell on your answer sheet. Sorry. So have you understood what I am trying to say? That all, how can you save time? One, how can you save time, and how can you save marks? Two things I have discussed. You can save time by showing all your workings in your cell, right? And how can you save marks? By making workings, right? So anything you add, deduct, multiply, please show it somewhere. If not in the cell, make a separate working and let the examiner know that you are making workings and this is the working, so he can give you marks appropriately. And you are not penalized for anything which you have not worked for, right? Okay, let's start doing the question. These were a few important tips. Some few tips are coming on by the end of this session as well. So I'll be moving now to the next question, the answer to the next question, and we'll be discussing the answer to the Haver. So there we go, the answer to Haverford company. Now see what happens in Haverford company. I will be discussing one by one the workings. Please, people, be careful. Okay, students, uh, do you know where the handouts are on the webinar? You will be seeing practice to pass presentation 2 over there. Now this Excel sheet, practice to pass presentation 2. Please trace to the handouts. Have you traced to the handouts? Have you reached the handouts? The last, the fifth handout is practice to pass presentation 2. This is the new sheet being added over here in the webinar. And this sheet includes all the work till yesterday. And this sheet also includes that commentary of mine, which I discussed in the class at the beginning on the Vernon's interpretation, right? So that interpretation is also there. Now only you are left with the work we have done today on the financial statements, the solution to Vernon and the Haverford company, right? This will also be forwarded to you soon, right? So now you have already got the 4-day work. So the 5th day work is left, right? And I will also be sharing some few material on WhatsApp on the consolidated financial statements as well, probably in a day's time or two, right? On Sunday, I will be doing it. I will be sharing some videos for your facilitation, right? So, okay, students, let's continue with Haverford company. Now see, I will start with this profit 2250. This has been taken over here. and we'll start making adjustments. So first adjustment will be seen in working number 1. Let's move on to working 1. So if you want, you can make journal entries as workings, and if you want, you can make the workings in statement form as well, as the student asked, right? So I hope you are clear with what I told you about the workings thing. Okay, let me move ahead. So now I'll be doing working for the 135 figure, further finance cost on convertible bonds. Let's see working number 1. Okay, convertible bonds. Okay, I hope you people remember the IFRS 9 convertible bond calculations. You must be remembering. So according to the question, the bond was outstanding for 3 years, 2007, 2008, and 2009, right? And the bond's face value was 8 million. And the coupon interest rate on the bond was, the stated rate was 4%. So every year, Haverford was bound to pay 320 for 3 years. And then after 3 years, he was bound to pay the 8,000 figure as well. So 8,320 in the third year. So first, what I did, I calculated the present value, multiplied these amounts with the present value fraction. And as I said, present value will always be calculated at, let me mention over here, that these are the cash flows occurring over the 3 years time, and this is the present value fraction at what rate? Not at 4%. This is at the effective rate. Effective rate was 6%. So these are the fractions at 6%, which have been given in the question. So if you note over here, they have given you the fractions at 6%. So I have used these fractions 0.943, 0.89, and 0.84 to calculate this, right? So moving on to the answer again. Right. So present value calculated effective rate. Now this present value, this 7575 is supposed to be the debt component, and the cash raised was 8,000. So what will be the rest of the amount, the equity component? So this company recorded all of this amount, 8,000, as a liability. So I made a correction first. What I did, I debited the convertible bond by 425 and sent 425 to equity. So the reserve for conversion is an equity item, right? So what mistake did they do? They record all of the 8,000 as a liability. So I reduced by 425 and increased the equity by 425. Now, when the liability is 7575, interest will also be calculated at 7575, and the interest expense will also be calculated at, always be calculated at effective rate. So I first multiplied 7575 with effective rate, which made 455. Now, according to the question, what the question says that the accountant had recorded this amount in profit and loss. He has recorded this amount in the profit and loss, which is wrong. This is not the correct amount which should have been recognized in profit and loss. The correct amount is 455, right? So I took the difference between these two, 455 and 320 over here. So they have recorded less interest expense. They have recorded this 320. 320 is the payment amount which they have recorded as expense, interest expense. So I have to increase the interest expense by 135. So if I increase the interest expense, I will debit the finance cost by 135 and credit the convertible bonds by 135. So doing this, my liability will increase and my expense will also increase. So I have recorded this in the question above. Let's check what I have done. This entry reflects in the profit and loss account 135. I have increased the expense. So in working one, I have deducted this 135 from here. So this is 455 minus 320. So this was the error being done by the accountant, which I have corrected. Now next, contract revenue not yet recorded. Now let me show you the adjustment. What has happened as per question. Please look in the question that they have not recorded the construction contract at all. Let me tell you about this adjustment a bit in detail. First, look, during the year, Haverford company entered into a contract to construct an asset for a customer, satisfying the performance obligation over the time. The total price was 14 million and the progress was 40%. Now what happened that to date, Haverford company has received 1.4 million from the customer, and this is shown in the above trial balance, right? But and further, they have recorded cost to complete the contract are estimated at 7.1 million. Okay, they have noted one more thing. See, now please look in blue color. Now you'll see some outlines in blue colors. Look, to date, Haverford company has received 1.4 million from the customer, and this is shown in the above trial balance. So this has been shown 1.4 million in the trial balance. What would have been the entry? Bank debit and received from customer, a customer account credit. Further, they have also recorded the cost to date. Cost to date of 1.9 million are included in the above trial balance. So have they recorded the revenue? They have not recorded the revenue. They have not recorded the cost of sales as well, according to the percentage of completion. They have recorded just these two things appearing in the blue. Check the amount 1.9 million and the other amount is 1.4 million. Check these two amounts. I will show you in the trial balance. Let's look at the trial balance, how it appears in the trial balance. Look, 1.4 million and 1.9 million. So what would be the entry for this? What they have entered? Bank debit and customer credit. And over here, expense debit and bank credit. So this is all expense. The brakes and all they have purchased expense. So these two items are appearing and no other Can you see any revenues over here? In here, any revenue or cost of sales? They have not recorded them. And revenue and expenses are recorded according to the percentage of completion method. So I have made now a working on this revenue. Let's look at that working. So I'm moving on to working number 2. Okay, there we go. Working number 2. So I'll be now discussing this working. Okay. So see, the cost incurred to date was 1900, and the cost to complete means future cost will be 7100. Do you remember IFRS 15 questions in MCQs? The total cost is 9000 and the price was 14,000. So profit is expected. Price is higher than the total cost. So 5,000 profit is expected. What is the progress? 40%. So I take 14,000 multiplied by 40% as revenue 5,600. So I have to record this above. You will see this in profit and loss account. And then they have not recorded the cost of sales as well. So 9,000 is the total cost multiplied by the progress 40% gives you 3,600. Both of these you can see above. Look. Let me show you the statement of changes, statement of adjustments. See, in the statement of changes, now you are able to see these two items. Contract revenue not yet recorded and cost of sales not recorded, 3,600. By doing this, I am adding 2,000 profit to the working. The profits have increased by 2,000. Agreed or not? If I add 5,600 and deduct 3,600, obviously the profit will increase by 2,000. The profit increased by 2,000. Now, this was the adjustment required. So 3 adjustments done. Revenue cost related to construction contract, and 135 was the interest expense which they have to record further, as they have recorded just 320 instead of the correct effective interest which was 455. Now let's move on to the next working. This is on depreciation 720. So there was an asset with them which was of 18 million. That it's appearing here. See this one, the property. This was of 18 million and its life was 25 years. They have not recorded the depreciation expense on it. So I have recorded the depreciation expense of 720 over here, right? And then they have not recorded a revaluation loss as well. So this we will see in the working, that how did we arrive at this revaluation loss of 480. Let's move on to the working. Okay, working number 4. Let me first show you the question as well. Then we come on to the working. What they say about the revaluation, let me tell you first. See, please look at adjustment number 4. What they say, that the life of the property was 25 years on 1st January 2007, right? So this is where I got 25. I divided 18 million with 25 years, right? Now what happens, that they revalue the property on 31st December 2007. The fair value was 16 million. So what should I do first? I will deduct the depreciation from this 18 million. The depreciation was 720. So once I deduct 720 from 18 million, I will be left with 17,280, right? But what's the market value? The market value is 16 million. So I have to reduce the property's value by 1,280. So the loss amount is this much. Loss is of 1,280. Agreed? Now, how to account for the loss? Remember that if you have revalued the property previously and you have a revaluation surplus in the financial statements, so loss will not be recorded first in the profit and loss account. First, you will eliminate that revaluation surplus. Once you eliminate that revaluation surplus, which is known as a reversal, like you have recorded a gain in past, now the value goes down. So first you will reverse the revaluation surplus. Once all of the surplus is removed, then you will record the remaining loss in the profit and loss account. So what happens in this question, that you have a revaluation surplus as well. I will show you in a few minutes that what's the amount of revaluation surplus. So these people have a revaluation surplus amounting to 800 in the financial statements. So they are having a revaluation surplus of how much? 800. So first they will reduce the revaluation surplus by 800, and then the remaining loss of 480 will go to the profit and loss account. So only 480 is going to be recorded in the profit and loss account. And where will this 800 go? This will go to the OCI first, because as gain is recorded in OCI, this reversal will also be recorded in OCI. In past, they have recorded the gain in OCI. Na? So now when the value goes down and you have to reduce the revaluation surplus, you will reduce the surplus also through OCI. You will increase the surplus through OCI and reduce also through OCI. Okay, now see what happens. Haverford does not make an annual transfer from the surplus in respect of excess depreciation. So they are not transferring excess depreciation from revaluation surplus to the retained earning, but no entries have yet been made to the account for the current year's depreciation charge or the property revaluation. So neither they have recorded depreciation nor they have recorded the revaluation loss in their financial statement. We have to do it. So now I am going to adjust for these things. Have you understood that how much is the decline in property value? It is 1280. And how will it be reported? Let me tell you the entry. 800 from the revaluation surplus will be deducted and 480 from the profit and loss account. Now, suppose the value of the property would have gone down right now for the first time, and in the earlier periods, no revaluation would have taken place. All of this 1280 would have gone to the profit and loss account, because in past no revaluation gain have been recognized. So all 1280 would have gone to the profit and loss, but not in this case, as we are having revaluation surplus in here. So let me show you the revaluation surplus first. See, there it is, 800, the revaluation surplus. Got it? 800 is the credit balance, means they had previously revalued the property. Now moving on to the adjustment which I have done and the entry which I have done. Look how much have I showed over here in the profit and loss account. I've showed deducted 480 from here, the revaluation loss, not the full 1280, and the depreciation amount was 720. This has been done, right? So let me show you the journal entry down. So that the things get further clearer to you. Okay. Let's look at the journal entry. See, what journal entry have I made? This is the journal entry. I've credited the property by 1280. Property values goes down by 1280 and debited the revaluation surplus by 800 and revaluation loss by 480 in the profit and loss account. Right? This will be the entry to this. And this is the working for it. 18,000 was the fair value, 720 was the depreciation, which brings down the value to 17,280. Then the market value is 16,000. So I have to bring the property down from 17,280 to 16,000. So the loss is 1,280. Out of this 1,280, 800 is the reversal, which will be deducted from revaluation surplus, and the remaining 480 is the amount to be recorded at revaluation loss from the profit and loss account. So this is the working for it. Okay, the last item, the last adjustment, they omitted some inventories. They failed to record some inventories. So they will have to record the inventory. So what did they do? Debit the inventory and credit the profit and loss account. So the profit will increase by 390. You can see in working number 5. So inventory worth 390 was not recorded according to the question. Let me show you in the question. Adjust the last adjustment to the question, adjustment number 5. It has been discovered that inventory totaling 0.39 million had been omitted from the final inventory count in the above trial balance. So I have recorded it by debiting the inventory and crediting the profit and loss account. So that's the statement of adjustment made by me. And then we will make the statement of change in equity. Now the statement in equity has got easier for us because we have done some adjustments. See, so one of the question is received. I will answer it in a short while. The questions coming on the chat. See, the last adjustment over here regarding the inventory 390. So this gives you a revised profit of 3305. So our profit has revised to 3305. Okay, one of the question I have received, which I feel I shall answer. It's important. And that question is that the student is asking that how did I know that the property was the revaluation surplus belonged to this property? How did I know? So I came to know from the question. See, however, for company property had been previously revalued upwards. What does this mean? This means that the revaluation surplus above, now as they have recorded an upward valuation, means in the past the value of the property had increased. So property would have been debited and the revaluation surplus would have been credited, leading to the balance on the revaluation surplus as 1st January 2007. So the balance being showed above is this one relating to this property, right? Satisfied? This is right. So it was mentioned in the question that the above surplus belong to this property, right? And there are no other revaluation in this question. Neither there are properties. Okay. Now student wants to, okay, I'll show you working 2. Want to see working 2? Student wants to see working 2, so I'm showing it. So that's the working 2. Okay, I will be coming back to working 2 for the balance sheet figure, for the statement of financial position figure. So you can read this working 2 back when I'm making the statement of financial position, right? Okay, so now my profits are 3305. Now what I do now, after I make a profit and loss account, next I won't make the statement of financial state position first. I will always make the statement of changes in equity first. So the statement of changes in equity will show me the changes that have brought to the equity opening balance. Now what happens? I've added the profit over here in the retained earnings. The opening balance 6270. This has been brought from here, 6270, right? And then the revaluation surplus was 800. Now is it there? Revaluation surplus no more there, it's 0. And reserve for conversion, the connected to convertible bond, is now 425, right? Now the share capital and the share premium was 3000, and a bonus issue was undertaken during the year. The bonus issue amounted to how much? 4000. But can you see the share premium has only 3000 in the opening balance. So 3000 share premium got debited and share capital credited by 3000. Now where did 1000 come from? So that 1000, if the share premium gets over, the remaining share capital bonus issue will be taken from the retained profits. So either you will be issuing a bonus issue, a bonus share from the share premium or from the retained earnings. So what entry they have passed, let me show you for the bonus issue. So uh, uh, have you got the statement of change in equity? The revised balances now are this much, and that's what there was a dividend as well. Dividend paid is this much. See, look in the trial balance. Let me change the color to show the dividend. Now you'll be seeing the dividend in blue color. Dividend paid. So dividend paid is deducted from the retained earnings, which is 3620. This is here. Balances, opening balances, you can see over here. These are all the opening balances picked from the trial balance. There was no reserve for conversion, and 6270 was the opening balance of retained earnings. Right. So this is the statement of changes in equity made by us. Students, it's not necessary to show double entries, but if you show double entries, it's very good. Examiner can come to the conclusion that how did you arrive at the figures. So if you are making and your workings in statement form, then you don't need to make journal entries. But if you are not making working in statement form, then you can make journal entries as your working. So it will be taken as workings over there. So obviously you will get marks if you make journal entries, and you but no need to make two things. If you are making statement form workings and things are clear from there, no need to make journal entries. But if you're not making statement form things, then you can go for journal entries, right? So do any one thing, don't go for both, otherwise it will uh, consume your time, right? And you may not be able to complete your exam due to doing duplication of work, right? Okay, students, let me show you the entry for the bonus issue. Okay, that's the bonus issue. See, I have not made any workings for bonus issue. I am showing it through the entry. So what happened? The company had a share capital of 20,000, right? You would have seen in the opening balance, and the bonus issue was 145. So the capital increased by 4,000. Now they had just 3,000 in the share premium. So share premium got debited by 3,000, and the rest 1,000 was debited from the retained earnings. This was the entry for the bonus issue. Students, have you picked those presentations from the handouts section in the webinar? Please pick them up. You will find the workings until yesterday over there, and you will get these workings as well in some way tomorrow. Okay. Now, students, let's start making the statement of financial position now. We have made the statement of profit and loss and the statement of change in equity. Now let's make statement of financial position, the balance sheet. So I'll refer back to the working number 2 when making the balance sheet. Look, there you go. Can you see the statement of financial position on the screen now? See, the property has been revalued to 16 million. This was given in the question, right? The 16 million amount. Inventory in the trial balance. Let me show you what was the inventory in the trial balance. You can see the inventory now in the trial balance at 4310, right? What I did is, see, I have not shown how did I reach 4700. So now I'm showing it over here. I'm concerned that how the examiner will know that 4700 came from. So what I will do, that the amount in the trial balance was 4310. So what I do over here, 4310 plus 390. So now examiner will go there in the cell and he will find out 4310 plus 390. So for you people, I make a working over here like this, 4310 plus 3. But you don't need to make this working which I made over here. The examiner will go to the cell and check it. Now what about the receivables? The receivables come from working number 2. Now before I move on to the receivable, let me show you the trial balance again. See, please look at the trial balance carefully. I want to show you something over there. Regarding the construction contract, we had 2 useless things in the trial balance, which will not be reported in the statement of financial position. In the financial statement of financial position, you should show the receivable, the contract asset, as I taught you in this IFRS 15 MCQ questions. Look, you have this balance. This is a credit balance, 1400, and this 1900. Both of these will not appear in the statement of financial position. Neither this nor this. This is the amount of cash received from the customer, and this is the amount of cash paid for the expenses. So they have recorded in these 2 heads, which are just useless for the statement of financial position. In financial position, you will be showing the contract asset. Now, how do you appear at contract asset? Do you remember the cost incurred to date, which is 1900? We'll take this, we will add profit to this. Profit is 2000. We'll add profit to this, means this amount goes to the receiver, and then 2000 add profit, 1900 plus profits, and then we will deduct this amount 1400, which has been already received. When you deduct this 1400 from this, how much receivable will be left? Minus 1400, you will get 2500 receivable. Now this working I have shown below. Let's check down. Let's check the working. Okay, that's the working. Now see, I have done duplicate work. I have done double work over here. You could have avoided. Now why I have done double work over here? Because I want to explain you. That's why I make the entry as well, and I have made the working as well. So, but you can just do one thing out of it. Either you will be making this entry, or you will be making this working. Right? Now let me explain you the entry first. What I did, first I credited this 1900, which was appearing above in as a debit balance because it was useless, and I debited this 1400, which was appearing above as a credit balance. Right? Both of these has been removed. Now what I did earlier, that I recorded 650 as a revenue, and cost of goods sold debit. What happens? You have got a balancing figure now. The balancing figure to this entry you will see in orange color. This is the balancing figure, 2500, and this is the contract asset. So what you have to do in the exam, that credit the revenue, debit the cost of sales, whatever it is according to the working, like this, these amount will be coming in the revenue and expense, right? And then remove those figures which were already there in the trial balance. So 1400 was on credit, I debited it, and 1900 was on debit, I credited it. So now afterwards you will be leave back with 2500. So this will be the contract asset figure. So you can check over here as well in another working. Check this working. This we used to do earlier in our MCQs. 1900 cost to date plus profit recognized minus amount billed. What do they give you? 2500. So this is the same amount as this balancing figure, and this will be reported in the statement of financial position. So this appears in the statement of financial position. Look here. That's the contract asset, right? So this comes from working number 2, right? And this receivable amount has been taken directly from the trial balance. Receivable amount is already there in the trial balance. This has been just taken directly. Then 4310 was taken directly. This, you know, the revalued amount, right? Then cash balance 10,320 has been taken here, and you get the total amount, which is 39,030, and total of current assets is 23,030. That's the asset side of your statement of financial position. Let's move on to the liability side now. Now moving on to the liability side, equity and liability side. Look, it's very easy. Just note down this section of the statement of changes in equity. In the statement of change in equity, you have these three things. These will appear in equity: share capital 6,000, reserve for conversion, and the retained earnings 4955. Look, share capital 24,000, 425, and 4955. Let me correct the share capital figure in my working. So in my working, this amount is 20,000. 20,000 plus 4,000 makes 24,000. Right. So these three have been brought from the statement of changes in equity. 24,000, 425, and 4955. So this gives me the equity section over here. And then move ahead, comes convertible bonds. So for convertible bonds, we move on to the entries. Just look at these entries. What I did, I took 7575 in debt component, liability. And then I credited the convertible bonds by 135. What they had done, they recorded 8,000 in the liability. Convertible bonds. Let me show you what they have done. Just check. Check this amount. 8,000. They've told you in the notes down that they record all of the 8,000 in the convertible bonds. So 8,000 is not, this is a split accounting. Na? You have to split the 8,000 into equity and debt component. So first you splitted it in debt and equity component. So that I have done down in the working. See. First by splitted. The 8,000 into debt, which is 7575, and add this amount 135 to it. So as they recorded all of the 8,000 in equity, I had to debit the bond by 425. Now 8,000 minus 8,000 was already there in the trial balance, right? 8,000 minus 425 makes how much? This arises due to this entry. 7575. And then they have recorded lesser interest expense. So further interest expense will be added to it, 135. Credit the bonds. So this makes the balance 7710 now. The sum of both these items. And after this entry, you get 7710. Right. So in the question, I've included 7710. Right. You can see the amount 7710 in the liability section. And then this amount has been brought forward from the trial balance. It was present in the trial balance and you get 39030. Now, let me give you a tip. Students, when you start making a balance sheet, put a total over here. Put a formula for the total over here. Just add all these items first. So what happens that you will keep getting the total over here of all the items. Put the formula in here in advance. When you keep on putting figures, punching figures in inventory receivables, these balance will start growing. And remember, it is not necessary to tie up the balance sheet in the exam. Even if the balance sheet is not tied, do not waste time in telling it up. Just put in some reasonable effort so that you can minimize the difference and get closer. But please do not Uh, do not try to check your answer again and again, because you are not very much expert in the exam that you will be able to find your own error. You may not find your own error and you waste your time. So it's better to do most of the workings and plug in the figures as much as you can and then leave it over there, so that you do not spend unnecessary timings in telling of the balance sheet and then you fail to do some good questions from where you can uh, snatch some marks in the end. So if you lose those questions and those marks, you'll be getting lesser marks. So it's always better not to spend time unnecessarily over things, right? So that's the end of this question. Okay, students, let me do one more question with you related to the associate, and then I will give you a few tips. We are not left with much time now. So let me do a question on associate with you people. But I have given a lot of tips in here also to you. Okay. Let me do a question on associate with you people. This one. Please go through the question number 1. Okay. Accounting for associate is as follows. If a company buys more than 20% but less than 50% shares, or 50% shares in another entity, that company in which the shares have been purchased become an associate, and equity method is used for account for it, and the investment will be recorded at cost first. Investment will be recorded at cost, and the cost of investment over here is what happened that Decent bought 30% of Arnie on 1st January 2008 when Arnie had a share capital of 1 lakh, right? So Arnie had a share capital of 1 lakh and 30% shares were purchased. Means 30,000 shares were purchased, right? How did they purchase the share? They had a share exchange. The consideration comprised one decent share for every 3 shares bought in Arnie. So one share for every 3 shares bought in Arnie, and then the market value of the buying company shares. Decent company, the buying company shares will be used. It was 4.5, which is given over here. So this gives you the investment amount, right? So the consideration given will be used. We purchased 30,000 shares and the parent company issued its own shares at a ratio of 1.3, and the parent company shares value was 4.5. So what will be the investment then? The value of the investment is 45,000. So 45,000 is the cost of investment. Now, investment will initially be recognized at cost in associate, and then when the associate will keep earning profit, the parent's profit share will be added to it. Parent's profit share after acquisition will be added to it. And if there is a loss, it will be deducted from it. So after the acquisition, the associated company earned how much profits? So they have told you how much profit they have earned. So see what they say. They say the company had a retained earnings of 4 lakh. When? On 1st January 2008, when they acquired the capital, right? 30% capital. And now on 31st December, after 6 months time, sorry, after 1 year's time, after 1 year's time, they are having a retained earnings of, they are having a net assets of 460,000. What does this mean? This means that the company had a share capital of 1 lakh and retained earning of 4 lakh. So the net assets on acquisition were, I'm making a working here for net assets. Net assets on acquisition. Net assets on acquisition were 500,000. Right? 100,000 plus 400,000. And now on the reporting date, they say that the net assets are 460,000. This means the net assets have declined by how much? By 40,000. So there is a decline by 40,000. This means that the subsidiary company has incurred a loss. So the parent company has to share the loss, the share in the loss. So what will be the parent company share in loss? 30%. So out of the 40,000 loss, parent company will share 30%. And if the company would have, net assets would have increased, the parent company would have shared the profits out of it. So due to sharing loss, the investment will decrease. And now the investment is brought down from 45,000 to 33,000. So the correct answer is 33,000 in this question. Okay, so students, that's all for the questions which we had to do in the 5-day workshop. So selected material has been, but I feel that we have done a lot in the 5 days. We have done a lot. We have covered a lot of topics. Usually this course is of around 100 hours, but we have done a lot of things in 15 hours. So great achievement. And your speed was also good, and a good participation as well from the students. Students, see, if you don't have received a link, please note one thing. Please note one thing. Achha, one student wants to copy working number 2. Let me move to the working 2 so that he can copy it. And then we'll talk a bit. That's the working 2. Okay, students, some students have not been able to get the link. So please note my contact number. So you can contact me. I will send you an invitation or will link you to the WhatsApp group, right? So my number is, so please note down my number. It's appearing on the screen right now. So if you have not got an invitation or you have not been able to join the WhatsApp, you can contact me. I will link you to the WhatsApp group, right? So thank you very much, students, for attending the workshop from so far away. Let me discuss a bit a few exam tips until the things get over. Okay, a question from student: why didn't I include the convertible bonds opening balance? So student, there is no opening balance present in the trial balance. convertible bonds are issued first time in the current year, right? That's why there was no opening balance. Okay. Why did I deducted? There is another question. Why did I deducted share capital from bonus issue? Actually, what happens that when we issue bonus shares, we don't receive cash. So if we do not receive cash, what entity we will make? We are giving those shares out of the reserves which are already present. So share premium is the reserve out of which we give bonus share according to the corporate law, right? So when you issue shares, share capital will be credited. What will you debit? Bank cannot be debit. You are not receiving cash. So over there we debit the share premium account. And if share premium accounts is over and we have issued further more shares as bonus, then they will be out of some other reserve which is retained earnings, right? I hope the question is answered. Okay, so let me give you a few more tips. Yes, please. In section A and B, don't have to. One of the tips that in section A and B, you do not have to submit any workings to the examiner, right? So please do work. You will be doing working for yourself, for your own for your own accuracy. Otherwise, examiner will not give you any marks for the workings in section A and B. But in section C, you have to make workings to show the examiner that how you have arrived at a figure, right? So either the working will be in the cell or the working will be shown separately. Okay. So please make those workings. And I think let's talk a bit about how to prepare for this exam. See, now you are left with very less time before exam, just a few days. So instead of doing new things, please do the past papers which you have already done. Do one or two new question on the constructed response space and keep doing the things you have already prepared for again and again so that you memorize it. Once you memorize thing, only then you will be able to reproduce in the exam, right? So it's better, please don't go for 500 questions, right? Select a few questions around MCQs around 200 and a few 5 or 10 profit and loss and balance sheet questions and five or 8 consolidation questions, right? And 2 or 3 interpretation questions, maybe 3 or 4 interpretation questions, and keep doing them again and again. Just ensure that all of the syllabus is covered in that in those questions, right? So if you keep doing those things again and again, that's better than doing too much and forgetting everything, right? So please remember, you need to learn things, and learning can always take place if you keep doing things again and again, right? So thank you very much, students. Further tips I will give you in the on the WhatsApp group. If I need to give any tips, I will do it over there. Thank you very much. Time's over. So see you. Uh, and I hope we be able to meet somewhere in future as well. And we maybe it sometimes happens accidentally whether we meet. One of the I basically live in Karachi, but once I managed to meet a student in Africa when I visited Africa around 5 years back. So he came to me. I didn't know him, but he came to me over there when I was catching a taxi, and he met with me very in a good way. So thank you very much. See you then. Goodbye, and wish you all the best in your exam, that you pass the exam in first attempt and you score a very good mark in the exam.